Over the last month, home sales have definitely picked up, especially when compared to last year's very low levels. The weekly pending home sales counts have been at or above the year ago levels for 4 weeks in a row now. This week, there were 3.8% more pending home sales weekly than last year at this time. So, in total, there are now 2% more homes in contract nationally than a year ago. So, finally, home sales are starting to show growth over 2024. Unfortunately, we had a huge spike in mortgage rates also as the chaos of the tariffs roiled the markets, making US debt less attractive, which drives up borrowing costs for Americans. So the question is, will this little bit of market momentum be able to hold up? As I mentioned last week, I expect a couple of more weeks of rising sales before we would see the impact of mortgage rates back above 7%. The tariff policies are unclear and unstable, so nobody knows if these conditions continue. If we back off the tariffs, then interest rates could come back down. But if these conditions do continue, home sales are going to slow down quickly and home prices are likely to get hit also. The timing of this shift is critical because we're rolling into peak home buying season. In fact, the unsold inventory of homes on the market has been rising for years and is now already at the highest level since 2019 nationally. A new variable this spring is that there are also more sellers coming to market each week than there have been in 5 years. So, total unsold inventory is up, and the weekly pace of new sellers adding to that inventory is up too. Why are these sellers emerging now after so many years on the sidelines? Well, one interpretation is that many of the sellers are acting on perceptions of the economy getting worse, perhaps trying to capture the equity in their homes to build a cash cushion, get out before it gets worse, perhaps. So the tariffs are really in danger of creating a perfect storm for the housing market chaos. Increasing mortgage rates, when we already have ample supply and in much of the country, and decreasing the economic outlook for many homeowners who might need the liquidity of their equity. So the storm isn't hitting the whole country evenly, and we will explore the details of that next week, Thursday, April 24th, in our monthly HousingWire Altos webinar. There is so much happening so quickly that we'll need to spend an hour with all the data. If you need to understand or communicate about this housing market, you should join us. There's a link in the description below to save your spot. These are limited to 1,000 attendees. We get way more than that each month who want to join. So click that now to reserve your spot. But first, let's take a look at the data for the week. So I'm Mike Simonsen. I'm the founder of Altos Research here at HousingWire. We track the entire US housing market every week so that you get the insights far before you see it in the traditional channels. Okay, let's start with pending home sales this week, the weekly pending home sales. There were 72,000 newly pending home sales transactions for single family homes this week, plus another 14,000 condo sales. That's 3.8% more sales started than the same week in 2024. These are not huge gains, but they are gains. January and February had fewer home sales than a year ago. March and April now has slightly more home sales. So the gains are now measurable. But these improvements are stemmed from cheaper cost of money than we had earlier in the year. So that improvement is suddenly fragile. So the question is now, how long can this little bit of home sales optimism last? Mortgage rates shot up by nearly 50 basis points in 1 week after the most recent tariff announcements. Rates did not recede after the U-turn on some of those policies after a few days. So the stock market has crashed and bounced with each announcement, but the 10-year Treasury is still under pressure, which keeps mortgage rates elevated. And the spread between the 10-year and the 30-year fixed mortgage is also growing, which it does when market risk climbs. So mortgage rates got a double whammy from tariff policy. In the last few years, we can really see dramatic slowdown in home buyer activity when rates have jumped over 7%. We saw this in September 22, again in September 23, in May of 24, and in February 25. Sharply fewer home sales in these moments. So look for that now too, unless conditions change. In this chart of the weekly pending home sales, the blue line is last year. Sales always peak at the end of Q2. And in 2024, that's when mortgage rates peaked too. So that set us up for a very slow May, June, July period. Uh, you can see the blue line here, only 60 to 70,000 home sales each week during that period, rather than 80 or 90,000 newly pending home sales per week, which would be a much more normal market. So, will this year's purple line be able to continue to rise above last year's sales rate? Well, that's what we're watching. Quite obviously, conditions are changing fast. So, that's why we do this data work each week. You don't want to wait for 6 or 8 weeks to learn about changes in the housing market now. The takeaway on home sales: late March and early April finally had some momentum in the weekly pending home sales. And I currently expect that momentum to continue in the data for at least one more week. But then we're on the lookout for a pullback in home buyer activity because, after the tariffs, our home buying conditions are much worse. That pullback could be very sharp. Stay tuned. That's the home sales growth, and it's been one trend of the last month. The other trend has been increasing levels of sellers each week. So more supply is coming. It's not huge supply, but there are still many parts of the country which actually have very tight inventory and not many sellers. But it is more. So nationally, there are more sellers each week than we've had in 6 years. This week continues that trend. So there were just over 76,000 single family homes, new listings, unsold this week. That's the most since 2019. There were another 15,000 new listings, immediate sales that are already in contract. So there are 7% more sellers each week than a year ago and only 4% more sales. So supply will continue to build. So this chart has a line for the weekly new listings each year. The purple line is for 2025. It's essentially back to the old normal levels. The gray lines are years past. So the gray lines at the top of the chart are from 2017, 18, 19. The number of new listings each week is finally back to those old normal levels. If you follow along with the HousingWire Altos data each week, you know that the Sunbelt states have a lot more sellers and the Northeast still have very few new listings each week. That bifurcation has been easing a bit. And even in the Northeast has been seeing some growth in new listings versus last year. In the HousingWire Altos webinar next week, we'll spend a lot of time with the local markets to see if places like Connecticut are finally getting some inventory growth. Or does a market slowdown actually exacerbate that north-south market differences in 2025? Like, it's not clear to me yet. If the market hits the brakes now, what happens to the Northeast? More sellers, fewer sellers? But that's the key to be watching for in the new listings data. So that's the new weekly new listings. The total unsold inventory is the other part of the housing supply equation. So there are now 702,000 unsold single family homes on the market. That's 33% more than a year ago. Last year at this time, mortgage rates were rising and inventory was rising along with it. Suddenly, our April now looks a lot like last year again with spiking mortgage rates. Inventory rose by 1.6% for the week. That's a pretty fast clip. It's not alarmingly fast. Inventory should build in April. We should expect 1 to 2% per week inventory growth. That if the unsold supply of homes on the market surges by, say, 2 to 3%, that would be a signal of a slowing market. We're not there yet, but we are watching. In this view, I have the last decade of unsold single family homes on the market. I've highlighted where we are this week, for example, and the unsold inventory back in, say, 2018. At that time, there were 850,000 homes on the market. There are 702,000 now. As I mentioned, most of the unsold inventory buildup is in the Sun Belt. So Florida, Texas, Arizona, Georgia, Colorado. The Northeast is still very tight with unsold homes. It was at this moment in 2020 when the 3 weeks of the pandemic housing crash was over and we started buying everything in sight. So you can see that 2020 curve there. Rates fell dramatically, inventory fell dramatically. By the end of 2025, we'll be back to the old normal levels of homes on the market. The pandemic shortage will finally be over. The median price of single family homes in this week's pending home sales is $399,000. That's a fraction higher than last week and 2.5% above last year at this time. As sales have stayed a little improved for 2024, over 2024, home prices are also staying just barely positive. So here's what to watch in home prices. Does the economic and financial turmoil create conditions where home prices have to shift negative? Do we see notable year over year home price declines? Do we see measurable monthly declines in home prices? These declines happened in 2022. And I've highlighted those two moments here. The light green line is 2022. In June and September of that year, consumers were shocked by how fast things changed and they stopped buying homes. As a result, prices dropped. These changes in the weekly pending home sales data preceded the headlines, which weren't visible until the spring of 2023, like 6 or 8 months later. And that's what we're on the lookout for now. Does the perfect storm of these tariff policies drive rapid monthly home price declines like we could see in that line in 2022? Home prices are already fragile. Each of the measures of home prices that we track, 5 or 6 of them, are just barely positive now versus last year at this time. But home prices have not gone negative. So the weekly pending median price is 2.5% greater than last year. In this chart, the purple line is this year. It's been above 2024 all year, just barely, but home prices are slightly up. If these tight conditions ease, maybe mortgage rates drop back down. Maybe we get lucky and they pull back more of the tariffs, and then we could see this year's price trend continue with slight price appreciation. But if consumers have to stop buying homes, what we're watching for here is any dip in home prices like we saw in 22. It's not there yet. It's what we have our eyes open for. And in keeping with the theme of recent weeks, where home sales have been picking up for 3 weeks in a row, that now the price reductions have not been accelerating. So we've had a little momentum with home buyers, and that's helped sellers not have to cut prices. As of now, 35.2% of the homes on the market have taken a price cut. That's up just 13 basis points from a week ago. Price cuts have been hovering around 35% for 3 weeks. Uh, However, two things to keep in mind with price reductions. First is they're already high. 35% of the homes on the market have been sitting unsold with have reduced their price, their asking price from the original list price. That's more than any April in a decade. Demand is already pretty thin, of course, so any changes in demand are going to be very sensitive here. The second thing to note is that this is the first place we'll see the impact of recently spiked mortgage rates back over 7%. If rates stay there, we should see price cuts move further north quickly. And look for that by the end of the month, for example, in the next few weeks. So price reductions are probably the most sensitive indicator of demand shifts. If a house is on the market now and a seller expects an offer this weekend, which doesn't come, by Monday, some of those sellers choose to drop their price to stimulate demand. And we see those newly price cuts as a bump in the slope of the line here. So you can see those changes, for example, in September of 22, In the teal colored line here, you can see it last year at this time when mortgage rates jumped back over 7.5 in the blue line. So that 2024 blue line at the end of April started climbing because home buyer demand stalled at those times. In all these cases, the price reduction shift was a clear indicator of future home sales and sales prices, both of which turned lower. If an offer isn't made today, that's a sale that doesn't close in May. Okay, that's all the data we have time for today. If you need to communicate about this housing market with potential buyers and sellers, you should join us at Altos Research. You can now get a free account with your local data, get a free report. Go to altosresearch.com, run a free report. Let's get started today.